Hey guys, I wanted to share what I've been working on this week, which is helping two federal families transition into retirement. The situation is a little interesting as both families are dual feds. We actually work with quite a few families that are dual feds, simply meaning both spouses are federal employees. And the situation looks like this. I've got one spouse from each family submitting an application for retirement under a VERA offer. And I think this is going to continue to be common as the reduction in force evolves. Just this week, we got the second deferred resignation offer came out from the DoD. So these families, both in their mid-50s, we've done some preliminary retirement planning, including building a retirement income worksheet, talking about structuring investments. And in the video here today, I want to talk about FEHB, Federal Employee Health Benefits, as well as the survivor benefit on the FERS annuity, okay? These topics can be a little nuanced. They can be confusing, especially when it comes to dual fed families. So just to back up for a minute, FEHB, let's talk about that first. Federal Employee Health Benefits, one of the most powerful benefits you have as a federal employee. This is your ability to carry your health insurance into retirement throughout the course of your life, okay? Now, you got to meet criteria to be eligible. And it's pretty simple and straightforward. There's a 5-year rule. You must be covered continuously for the previous 5 years under an FEHB plan prior to your retirement. And you must be entitled to retire on an immediate annuity, okay? We know immediate annuity can come in a couple different ways. Normal retirement is simply MRA plus 30, age 60 with 20 years, age 62 with 5 years. Or you can also qualify for an immediate annuity under MRA plus 10. And in this case, of course, VERA qualifies them. In this case, both families, all 4 of these spouses are federal employees. They've got more than 20 years of service. They're, as if things hold, all 4 of them are going to be eligible for FEHB. And the retiring spouses under VERA right now certainly are eligible. They've been enrolled in FEHB for the previous 5 years, and they're going out under this VERA offer. So no issues there. Now, where this becomes confusing is with dual feds, whose plan do we keep? Because in this case, we've got 2 spouses that are planning to continue working. And they want to continue working as long as they're able. We'll see what happens with the reduction in force. But whose plan do they keep? That's the question that always comes up. I'm going to preface this by saying this is for information and education only. Of course, I want you to consult the FEHB handbook, OPM, your agency, any professionals that you work with to make the decision that's right for you. You got to give this stuff a lot of thought and make the right decision. In a lot of cases, it can make sense to keep the active federal employees coverage. And the reason is simple. It's how premiums are paid. So when you're an active federal employee, your premiums for FEHB are paid on a pre-tax basis. When you retire, premium conversion occurs, and that simply means that now your premiums are going to be paid on an after-tax basis. Okay, so there can be some significant savings there. Let's look at it this way. Let's say you pay $10,000 a year in FEHB premiums. You're in the 22% tax bracket. That's $2,200 a year. Okay, so that's significant. Both of these families are currently in the 24% tax bracket. Here's where it gets a little bit tricky. Okay, let's talk survivor benefit for a minute on the FERS basic annuity. These two things are intertwined. Now, for a non-fed spouse to continue FEHB, if the federal spouse predeceases, they need to be entitled to a survivor annuity, and they have to be covered under the plan previously, meaning there would need to be a survivor benefit in place for that surviving non-fed spouse to receive an annuity to continue the FEHB, okay? With most non-dual fed families, the survivor benefit is going to be elected probably just for the FEHB, if nothing else. However, the situation is different with 2 married federal employees with these dual feds if they're eligible for FEHB on their own, okay? And like I mentioned, in this case, if things hold as they are and the remaining 2 federal employees move forward and retire with an immediate annuity, being entitled to FEHB on their own frees them up to make the decision about the survivor benefit based purely on the financial implications and what their goals are, right? Their specific set of circumstances. Refresher, the survivor benefit premium works like this. Your surviving spouse or partner can receive a benefit of 50% survivor annuity if you pay a 10% annual premium, okay? That's a deduction right off your gross annuity. You can also elect a reduced survivor annuity of 25% by paying a 5% premium. So it looks like this. If your annuity is 25 grand, you take the full benefit, that's a 10% premium. You're paying $2,500 a year, a couple $100 a month for that premium. You take the 25% survivor annuity, you pay a 5% premium, that's $1,250 a year, okay, $100 a month. So that's what it would look like in that circumstance. I still like the idea in most cases of the survivor benefit for a number of reasons. The biggest one really is guaranteed income like this is really hard to come by, guaranteed income from the federal government. Okay, that's a powerful thing. And the second thing is you paid into the system for a long time. I mean, legacy employees' contribution rates are lower, but you still have significant money tied up in this thing. It'd be nice to receive a return of your contributions to some extent if things don't go as planned. Now, of course, you can run the numbers to see what makes sense, but what I would encourage to do when it comes to the survivor benefit is just do a real intense evaluation of your retirement income compared to your expenses. So in this case, with dual feds, we've got 2 first pensions, 2 social security benefits, 2 TSPs, any other investments, they're going to be able to generate income. Okay. So what does the income from that look like? Build your retirement income worksheet. Okay. Take into consideration inflation adjustments, et cetera. And then run the numbers. What happens if you lose one of those first pensions, one of those social security benefits? You're still going to retain the investments. You're going to inherit the investments from the other spouse. So what kind of a situation will you be in from an income standpoint? Then compare that against your expenses. So maybe your expenses drop a little bit if your spouse passes away. Maybe it's not too significant. I don't know. You have to look at those numbers and kind of try to sort through it a little bit. Then you can make an assessment. Also considering things like, what do you want in this circumstance? Do you want them to be really comfortable and not worry about anything? Or do you think they'll be okay, right? Have the conversation together, of course. The last consideration that we'll just touch on, a lot of folks think I can just replace the pension income with an insurance policy, which can also be a fine strategy that just needs to be approached with care, right? Getting insurance in place, making sure it's the right type of insurance, the premiums are reasonable, run the numbers and compare it against the survivor benefit. Now, of course, as I mentioned, these are big decisions. Don't go at it alone. Consult the right people, consult your agency, OPM, as well as any professionals that are on your team, okay? If you have questions like this, if you're working on something and you'd like us to be a resource, please reach out. Love to hear from you. This is the type of work we do on a day-to-day basis, okay? If you found some value here, give us a like and subscribe, share with a friend or colleague, and we'll see you next time.